Welcome back. Joining us at this hour is Sunil Subramanian, market expert, to talk to us about how he's viewing markets. Sunil, we've seen a bit of an elevation, and of course we have Rudramurthy BV as well joining us, founder and director at Vachana Investments. Great seeing you, Rudra. Let me first start with Sunil. Sunil, one of the qualms or one of the issues with regard to the markets over the last couple of days is the fact that crude has continue to spike. With this UAE equation coming back into play, there's still no respite with regard to crude oil. What's the sense like? As long as crude is elevated, Indian markets will likely see a ceiling. I know you don't track charts, but even in terms of earnings, right? Largely that would be the logic.
No, actually, if you see the UAE situation, right, it's not going to lead to any immediate supply increase.
Correct.
See, what's the situation there is because UAE depends on the Hormuz Strait, right? And it's heavy crude, right? And Saudi Arabia, which has the alternative route, is the lighter crude. And anyway, UAE obviously is not getting along with Saudi Arabia in terms of the relationship from a crude perspective. They have spent $150 billion on expanding capacity to 5 billion barrels. Right? And now they are limiting them to 3. So clearly UAE feels the heat. Second, there's a political aspect to it. Politically, UAE wants to be aggressor in this war and thing, but Saudi Arabia wants to be on the peace side. So it looks like UAE and the US are aligning closer to each other. So where I'm coming from is that this is a very significant step because about 15% of OPEC's production is UAE. That goes away, OPEC's bargaining power comes down. So the way I see it is that in the short run, it's a war which is dominating the oil prices because the Hormuz Strait is closed. But as the war ends, this will have a significant impact because then when you look at it, my earlier estimate was that in about, let's say, 2 to 3 months after the war, the oil price would settle at about $80 to $85. But now with this happening and UAE likely to pump another $1.5 million into it and the demand destruction because of war, now in a medium term, I see it again oil retracing to 70. So what I'm saying is that from a medium-term outlook, this is a very positive development for India. In the short run, it's the war which is dominating. So don't expect any immediate reaction. That's why Brent hasn't reacted. But as any sign of the Hormuz Strait situation getting solved, we'll see oil, then futures oil show a positive reaction. And so there's an extremely positive, I would say, if you have a medium-term outlook, I think for India's fiscal deficit and everything, if oil comes back to 70, it's a huge relief and a lot of positives there. So from that point of view, I would say that this, again, it's not a short-term tactical play, but from a medium-term perspective, it removes one cloud on future of India from the fact that oil, instead of stabilizing at 80 to 85, will likely stabilize around the $70 level. Give it 18, 24 months for that. But I'm saying that a fundamental investment outlook would naturally be taking that time frame into account. Rudra will be able to better give you a short-term view on how this is going to affect the stock market and the oil market.
Excellent toss. Rudra, over to you.
Yeah, see, for me, Harsh, data points, if you see for very short term, in spite of this news of UAE getting out of OPEC, I'm still not seeing any down move in terms of the price action. So for me, crude oil remaining above $90 per barrel is definitely not good. See, for me, even though we have seen Nifty rallying 2,200 points from the recent 2-3 weeks bottom, what you have to be very cautious is 3 data points. One, crude oil where Brent is above $110 per barrel, not a good sign. Number 2, rupee dollar, very, very important. We have now back to those levels closer to 95, and that is not a good sign at all. 3, for last 1 week, you see continuously again FIIs have turned sellers. So for me, rupee dollar and then the Brent crude price and then the FII selling is not a good sign for very, very short term. And you have to keep in mind that yes, currently we are sitting after a rally of about 2,000 points plus on Nifty, and we are not at the bottom like 22,000 what we were 2-3 weeks back. So for me, it should be a very stock specific market. There are very relative strength clearly identified in few sectors and stocks. You have to be very choosy, and also keep in mind we have the Fed outcome today. We have the election results and the exit polls which will come out. So too many news flows, data flows around. One has to definitely have hedge positions if you are very short-term trader, especially trading index. and you have to be very sector specific and stock specific, where you have to choose sectors, for example, like power and energy theme, commodity, and you have to also be very selective with FMCG and pharma. And even if you see banks, private banks are definitely showing a lot of weakness, and last 2-3 days there is definite weakness in larger private banks. But within the same financials, you see mid-tier private banks like names like RBL Bank, Bandhan Bank, Indus India Bank, they are all showing relative strength. But if you see larger private banks and even PSU banks for that matter, they are not showing any kind of strength whatsoever. So to cut short, you have to be very sector specific, stock specific, have hedges, and let Nifty cross 24,200, very important level. Then I will turn very, very bullish for even short term in this market. But till then, remaining cautious and remaining very selective is very, very important.
You know, there will be some big movers in a market like today. So Rudra's right. You want to be stock specific. I'll quickly mark out some stocks where you've come out with numbers. Let me talk about REC first. Higher stage 1 coverage is what they've built in, as a result of which you've seen a softer profit after tax. NII also slightly softer because there's been no growth that's translated. You're seeing a 3% knock, very, very early minutes of pre-open, viewers. So you want to mark that. CAT came out with extremely strong numbers. So that one likely to do well in on a day like this. 5% higher in pre-market is what we're seeing on CAT. Again, the numbers were extremely strong, 14% margins, good growth, all of that getting built in. Bandhan Bank, credit costs have fallen, as a result of which you've seen an improved profitability. Metrics of profitability, in fact, 500 crore plus in terms of profit after tax for the current quarter. For the full year FY26, and this is important to mark, the profit after tax was over 1,200 crore. So a large chunk of that full year FY26 profitability coming in Q4. This is Bandhan Bank. Let me quickly also pull up and of course we'll speak with the management of CAT, but with regard to Bandhan, there's the stock chart, 6% higher on a Bandhan in early minutes of pre-open. Among other lenders, a Fed Bank Financial, again, a very good set of numbers from a Fed Bank Financial. You've started to see improvement, PAT going above 100 crore, and you can see the stock reaction on your screen. When you're looking at some of the other financials, 5-star was the other one. Again, the credit cost was elevated, but what you want to read through is the slippage number. The slippage number has come off. That seems structurally positive. There is a positive bias to the numbers. Stock obviously in pre-market is showing a downtick. GRSC on the defense side, very, very strong numbers, 20% plus growth. You're seeing margins going up above the 15% mark, and therefore you're likely to see a positive reaction on that counter. What you're also expected to see is a very decent move with regard to an MV. Extremely strong numbers from an MV photovoltaic. Any of these names that are standing out for you, Rudra, on charts?
See, Harsh, I'm very clear. Defense, even as a sector, looks very strong to me. Might be stocks like BEL, HAL, or even Garden Reach. All these are good stocks. Definitely one can buy at current market price or on any dips. But two names stand out to me here. One is definitely Bandhan Bank. So this is a stock you can buy on any dips you get, or even at current market price, buy some quantity and accumulate more on dips to levels closer to that 175 to 180 range. But we are seeing a gap up open closer to that 188 mark. So any dips to levels closer to 180 keep accumulating from current market price. I won't be surprised to see Bandhan Bank cross 200 very soon. And even see it is another stock definitely you can hold on to if you have, or buy on dips. And another stock, because of results not showing good sign, that is REC. Anyone looking for a fresh entry, for me, you have to use this God-sent opportunity to buy this REC, which is showing a downtick post the results what came yesterday, because I see strong support for this stock at 350 zone, and I'm very bullish on energy and power as a theme. When that theme does good, definitely even the power financing companies like your PFC and REC should do good. So I will use opportunity of this dip today, coming post the results of REC at around 365 zones to buy keep a tight stop loss of 350, and I'm giving a target of 400 plus on REC. So for me, fresh entry can be looked at in REC, and on dips, look at buying both Bandhan Bank and CEAT, and also on defense as a theme. Definitely, it is one of the sectors where you can look at buying some of the stock names like BEL, even for that matter, HAL, GRSC. These are all few of the names which looks very, very attractive.
Very interesting, Rudra. You brought up two lenders, of course, and that entire defense basket. Now you can see the uptake with regard to Garden Reach. Those numbers were indeed strong. I did flag those off. Sunil, let me come to you. Any of the lenders that are standing out for you? We came out and there's a whole host of lenders which have been coming out with numbers. So you have plenty to speak about. But at least in trade today, a Bandhan, an REC, a Five-Star Finance, a Fed Bank Financial, a well-diversified, but moreover, within that MFI come MSME basket, you're starting to see improvements. You're starting to see green shoots.
Well, I am not allowed to speak stock specific, so I won't touch any of those names. But to me, yes, the lending pack, because I think it started off with the iBank results in terms of the fact that rural demand and auto demand both have held up strongly, and that connect between rural and auto is naturally played through the lenders, right? Because of the EMI based purchasing. So I see that, yes, and NPA levels are fairly decent across the financial system. I'd also like to draw attention when you're talking of financials, even to the non-lending side. I think asset management companies have also come out with good results, and the penetration story continues to play out. So overall, yes, except that short term in the public sector bank, because of the ECL framework, which RBI is going to implement, there will be a sort of pressure. Plus the fact that they had a very good rally means DIIs would be tempted to book profits there. So medium term, my outlook on public sector banks is positive, but short term, I see some pressure because of the need to book profits to buy other stocks. Because DIIs, blew up a huge amount of their cash last month and the beginning week of this month, around 1.5 lakh crores. So their powder to buy fresh is not so great. They are building it up slowly now with fresh inflows. So I would say that PSU banks probably in the near term might see some pressure, but there are good accumulation opportunities if you're a medium-term investor. But overall, I believe that the banking and financial services SPAC itself is a pretty good play given the days to come.
Okay, banking financial services is a good play. Let me, though, take a bit of a step back, look at the global setup and try and give you some of the news that's coming from around the globe. Frederick Merz has sharply criticized the US, saying it is being humiliated by Iran amid stalled negotiations. European leaders are growing uneasy with the prolonged conflict, warning of escalation risks and signaling reluctance to be drawn deeper into the war. Airbus reported a sharp drop in Q1 profits, with operating earnings down 52% as aircraft deliveries slowed down due to engine shortages. While the company maintained its full-year guidance, supply chain constraints continue to weigh. AI-linked stocks slipped after reports that OpenAI missed internal revenue and user growth targets. Shares of Oracle and chipmakers like Nvidia and Broadcom fell, raising fresh questions about the sustainability of heavy AI spending. And Starbucks has raised its full-year outlook after a strong quarter, with shares jumping 5% in after-hours trade. The company beat estimates on both sales and profit, driven by a 6.2% rise in global same-store sales. And General Motors has raised its 2026 profit outlook, helped by a potential tariff refund and strong pickup truck demand. Despite cost pressures and lower shipments, GM's North America margins improved, signaling resilience in the US auto market. And King Charles III called for unity and stronger support for Ukraine in a landmark address to the US Congress during his state visit. Meeting Trump earlier, the king emphasized shared democratic values and the enduring alliance, even as tensions over NATO, trade, and the Iran war linger. All right, so that's really the sum up with regard to what's playing out globally. But some of the other numbers, some of the insurers that also came out with numbers, Rudra, Go Digit, Star Health, they were just two of them. Decent set from both of those. Would you at all look at either of these on charts? You've seen a very decent rally on these from the lows, maybe over the last 3 to 4 months. So you've seen a decent rally. What next?
See, for me, insurance as a sector overall doesn't show strength. If you see, even SBI Life post result corrected, HDFC Life again post results corrected. But yes, specifically, if I have to go with Go Digit and then this a star, you can just see there is complete consolidation pattern and sideway move which is happening in Go Digit. So I don't recommend a buy for short term or for a trading momentum kind of a buy, but definitely I will avoid this as an entire space. But if you force me to pick a stock out of the insurance pack, I will still remain with SBI Life. That is one stock which has just taken strong support at bottom zones of around 1750, 1800 zones. So that will be only one stock which I will look at buying, or else definitely this entire sector, insurance as a space, I will give a pass.
Right, indeed. Okay, that's the take coming in right now on what some of these insurers are up to. But Sunil, I want to throw in light on what's happening in the pharma universe. The semaglutide opportunity now crosses borders. You've got DRL getting the go-ahead for generic Ozempic in Canada now. Material opportunity, you think, for Indian generics?
Absolutely. And see, if you remember, these semaglutides were actually originally diabetic thing. India, as it is, was the diabetic capital of the world. But as a weight loss drug is where obviously it opens a much wider market. And obesity is obviously in Western world with the what do you call unhealthy food eating habits. It's a huge opportunity. I think it's kind of explosive. I would say it's almost like you can say a Y2K opportunity in the IT that happened because they're coming off patent and literally, if you can see, they can retain very good profit margins, but sell the product at what 25% of what the patented, the branded drug costs. So I think it's a huge opportunity and it'll open up even more windows over the next coming weeks. So I see these as a game-breaking opportunity.
Okay, just a minute left to go before we ring the opening bell for this Wednesday in this truncated week. And I just want to see where the pre-open rates have settled in at. And not bad, much unlike what the GIFT Nifty was indicating when we came into trade this morning, which was an absolutely flat move. We are back above the 24,000 mark. And I just want to see what the Brent prices are like and whether there is any stability which has come by after that spike all the way to $114 to a barrel. 110 is where Brent still is. And Brent is clearly topped that 107 mark conclusively now after Iran peace talks stalling. And of course, UAE's decision to exit out of OPEC and OPEC Plus. So while, of course, crude is going to be a key watch point for us, lots of earnings, you will see perhaps some more move on Maruti as well as Eternal, the two heavyweight numbers which came by during market hours yesterday. And then, of course, today is going to be Bajaj Finance, Federal Bank, and a slew of others which